Hi everyone, Michael from Bullion Now, bullionnow.com.au. So what an entertaining few days to a week we've had. It wasn't even a week ago that I was talking about the fact that gold had broken through $3,800 an ounce Australian, $2,500 an ounce US, and the fact that it had gone up fairly rapidly, and that I expected, people were talking about the fact that it was maybe it was going to run harder, or some of us were actually starting to say, actually, we think possibly it might take a breather. Less than a week later, here we are, and we've dropped about $140, $150 Australian per ounce in gold, about $100 US per ounce. So fairly volatile times and fairly surprising times. Now, look, let's be honest right from the start. No one knows where the price is going on a day-to-day basis. Anyone that says, oh, it's going to be at X by 10 minutes time, or a week's time, or a month's time, or a year's time, like at best it's a guess. It's not a this is what you can rely on, and you've got to take that into this bullion dealer's musings. That I don't know where it's going, the same as no one else really knows where it's going. But you can certainly start to analyse and look at history and attitudes and things that are happening around the world. Now, none of this is financial advice. You've got to make your own decisions, analyse your own data at the end of the day. But from my perspective, from my experience, this wasn't a shock. We spoke about this on the live stream on Friday, that the price had pushed fairly hard, and it wouldn't surprise any of us to see a bit of an easing back in the price overall. Now, I don't think any of us expected it to drop quite this rapidly, but certainly easing to this sort of point was certainly on the cards and has been for a little while, because the gold price has pushed pretty hard. One of the reasons, there are several reasons why it has dropped, and one of them I've just hinted at. There was quite a lot of hot air in the market. One of the things that we also saw was with the civil unrest around the world, whether that be, and I'm exaggerating slightly by saying civil unrest in the US, but you've got the elections in the US, which is causing ructions over there. You've certainly got an outbreak of violence in the UK at the moment. And this is before we start talking about the usual hotspots of the Middle East and up into Europe. So there's a lot of reasons for gold particularly, but for gold and precious metals to be fairly volatile. You also have the fact that the stock market has crashed over the last few days. Crashed is an incorrect term, sorry. The stock market has come back fairly quickly over the last few days as well. Now, one of the other effects we see of that is when prices in the stock market drop fairly quickly, that will have an impact on gold, but not necessarily in the way you think. A lot of the bigger traders, and I'm talking, squillions of dollars, not mum and dad traders, a lot of these people keep a lot of their quote-unquote spare cash in commodities like gold and silver and things like that. The reason they do that is because they're very deep markets and they're very liquid markets, so they know that they can get their cash back rapidly when they need it. So if you have a crash of the correction, I've got to stop using that term. If you have a fairly rapid easing in the price of shares, you will find a lot of these people start getting calls, their margin calls start coming through, and they have to find cash fairly rapidly. So they start liquidating a lot of their precious metal positions. That, on top of the fact that we've had all this this increase in spot price over the last few weeks, has meant that a lot of people have unloaded for a lot of reasons, and obviously when supply is greater than demand, it drives the price down. So there's several reasons why it's come down, and I think we've had a bit of a confluence of events. Some profit taking out of the market, as well as this stock market margin call supply coming into the market, so it's driven the price down. Now, what does that mean for you as a bullion investor? Well, a lot and not much. Let's be honest. If you're the dollar cost average type of person, that's how you invest, this should make no difference to you. You still keep plugging away, you still put that $100 away, $500 away, $1,000 away, whatever that is that you put away regularly. You keep doing that, and you just smile a bit more because you know you're getting that little bit extra precious metal in your stack. If you're in the market, or you've been putting some money aside for that drop, maybe now is the time to ease into picking up some of your desired metal. Now, whether that be your dollar cost average like I do, but keep a chunk aside every week for the dip in the price, I'm starting to move into the market now, and I'm starting to purchase a bit more than I normally would. This is personally not as the company. I'm purchasing a bit more than I normally would because the price has come down. Now, it doesn't mean we've necessarily hit the bottom. It could go down further. But the price, when it comes back, to that degree in a fairly quick period, it's probably not going to run a heck of a lot further. I could be wrong. Could be a week's time and I'm sitting here with a very red face trying to explain why I've said that the current price was good when it actually eased further. But I think it's a good time. Again, I'm not the guy that's going to say go all in, but it's a good time to start easing into possibly buying some more. If you're in the seller side of the equation, now might not be a great time to drop a lot of your investment, unless you're needing to because you're rolling it into another investment, another property, a different metal or commodity, or you're taking advantage of this dip in the stock market and you may be investing into there. But if you're wanting to sell, and selling is where you're at the moment, then maybe ease back on the selling. Sell a little bit. That way, if it does drop further, you've got a bid out and you've got a better price for it. If it bounces back and goes straight back up again, well, you didn't get rid of it all. Yeah, okay, you don't like the fact that you took a little bit less for that amount, but at the end of the day, you've still got more to sell, so you can take advantage of the higher price. So it depends on where you're at as to what you should do at this point. But the one thing you should do is not panic. Don't panic and dump your investment, because this is like anything else in investing. This is a phase. We will move through it. Prices may move lower. They will probably move higher. And I can say that fairly confidently because of the last 5,000 years. That's exactly what gold has done. If you're in the buying market, it's again not the time to panic. It's the time to go and assess, what am I doing? Do I jump in now? Do I go full throttle and grab as much as I can? Or do I just ease into it and I take smaller chunks, recognizing that I may not get the best price on the purchase, but I'll still get a pretty good price. Only you can decide these things. Don't listen to the pundits, me included. Make those decisions for yourself. But the one thing I can say is please, please, please don't panic in this. Just take a deep breath. And if you're really unsure, hold. Just hold for a day. Hold for a week. Yes, it's probably going to cost you some money one way or the other, but there is nothing worse than making a decision in a panic. All right, so I hope that provides a little bit of comfort for people. There's a lot of ructions, a lot of questions out there, a lot of ups and downs, and we're going to see far more over the next 6 to 12 months. That's probably the one prediction I will stand by. So if you're feeling uncertain, just take some comfort in this video and just decide what you want to do and ease your way into it. All right, that's it for now. We'll talk again very, very soon. See ya.